Hi traders, and welcome to my video on the MACD and Bollinger Bands trading strategy. I'm going to show you how you can use this strategy to capture moves like this one for almost 400 pips. This is a euro dollar 1 hour chart. I have my Bollinger Bands here and the MACD there. I'm just using the default settings for both indicators. You can probably find them free on your trading platform. This is the MT4 platform I'm using. This strategy can be used on any trading instrument, Forex, stocks, cryptos, commodities, indices, etc. And any chart time frame. This is a 1 hour chart. I prefer the higher chart time frames just because I find the signals more reliable. That applies to the Bollinger Bands and MACD, as well as other technical indicators. Price action analysis in general, candlestick patterns, support and resistance. I'd much rather be able to catch a big move like this for a few hundred pips over the space of a couple of weeks rather than stress myself out trying to trade a 1 minute or 5 minute chart all day long. Okay, so less time chart watching as well. All right, that being said, let's cover the strategy and how to use it. So the first component is the MACD. And the MACD here, which you can see below the chart, is we're going to use to filter the trend. So basically when the MACD is below this red line, okay, signal line, and below 0, we say that the market is trending downwards. Okay, if the MACD is above the red line and above 0, the middle line, we suggest that the market is in an upwards direction. So that's a basic interpretation of the MACD. You also have divergence, which is basically when the MACD is making lower highs, we can expect the market to go to the downside, just as when the MACD is making higher lows, we can expect the market to increase. Now, this doesn't happen all the time, which is why we're combining indicators and not relying on one. And we're also including price action analysis for additional confirmation. For me, the best form of confirmation, such as support and resistance, trend lines, and candlestick patterns. So that's the MACD covered. For this short trade, we're going to want the MACD bars to be below the signal line and or below 0. Onto the Bollinger Bands. Now for the Bollinger Bands aspect of this strategy, we're going to look for the bands to either break out below the lower band for a sell trade or above the upper band for a buy trade. Okay, that's one particular entry. Another thing we can do is actually the reverse. Okay, so in the reverse situation, we would sell when the price goes either above the middle line or above the upper band. This is because we would do this in a trending market. Okay, so we wouldn't sell if the market was moving upwards. Let's just find an example. We wouldn't sell when the price goes above the band in an uptrend. However, in a downtrend, we would consider selling when the price goes above the middle or upper band. Okay, so just to clarify, for this sell trend, if price breaks out below the lower band or pulls back to the middle or upper band, we can consider these as potential entry points into a sell trend. Okay, so that's the MACD, that's the Bollinger Bands. Also with the Bollinger Bands, they can do something called the Bollinger Bands squeeze, which is when the wider the bands are, the greater the trend. You can see here they're wide, the market is trending downwards with momentum. And the tighter the bands are, the lower the volatility, and therefore the higher chance there that we are in a period of consolidation or a ranging market. Okay, so the strategy is very simple. Hopefully you've understood everything so far, but it is going to require you to do something extra, and that's just to mark your support and resistance levels. It's not hard, just mark your highs and mark your lows. Okay, so when price was in this consolidation area here, what we would have been doing is waiting for a breakout. Okay, and you can see the breakout happens here of this support line. So triple top candlestick formation, and we have a breakout there. Okay, so the MACD, if we look at the MACD crosses the 0 line and is below 0. and is below the signal line here. Arguably here would have been an entry just because we can see the histogram bars are falling. It's falling below the signal line. We're on for looking at sell opportunities. Okay. However, with the bands, we haven't had the breakout yet of the lower band. So we're going to wait for that to occur. Have this pullback here. Personally, I would have probably taken this trade just based on the support level, and this is why I don't like to rely solely on technical indicators. I mean, I could ignore this and just tell you to trade the sell on the breakout of the bands there, which you can do. It's still a good trade. You know, I'll just zoom in to show you. So the MACD histogram is below 0 and below the signal line. That's our MACD signal. And the candle, this bearish candle, breaks below the lower Bollinger Band. So that's our entry point. The market is making lower highs. Downtrend is starting. We're in as early as possible. Okay. However, this support level here was quite significant. You can see it's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Many times this support level has been touched. So once this price breaks out through that support level, you can see it does with some momentum. So this could have arguably have been the entry point. Okay. Not to mention the bearish, we have a master candle there. So that's a big up candle followed by at least 4 within its range. So a breakout of that low is considered a strong bearish signal. I do have lots of videos on candlestick patterns you might want to check out. It's good to be aware of them on your charts because they can give you additional confirmation. Okay, we also have a 3 inside down formation there. Bullish candle followed by 2 bearish. 3 black crows. All good bearish signals. Okay, so for the purpose of this video, we'll stick to the Bollinger Bands entry. So we take our entry here. Okay, the breakout of the lower band. And if we zoom out, this trade had a potential of around 300 pips and counting. Okay, not a bad trade at all. On the 1 hour chart as well, so less time chart watching. I mean, good luck trying to get 300 pips on a 5-minute chart. Not to mention all the broker's fees you're going to pay in terms of spreads, commissions, potential slippage. Okay. And what I do is my initial stop loss would be around this high here somewhere. Okay. You could use the middle Bollinger Band or the other side of the breakout. So it'd be relatively tight, around 20 pips. We're looking on a stop loss, which is good for the 1 hour time frame. And then importantly, as the price is falling, we'll be moving our stop loss. So we won't just leave it here. Okay, we want to protect ourselves in case price turns around. So as price is falling, and price comes to here, we can move our stop loss from there to there. Okay, as price keeps falling, and it drops down here, we can move our stop loss up in this area. Okay, wait for this pullback, then price is falling, we can move our stop loss here. And here, here. So on and so forth. You get the point. Basically trailing the price on the way down to maximize the move as much as possible. You can even close part of your position, banking some pips. Okay, so that would have been the ideal entry using the MACD and Bollinger Bands for this particular trend. Now, if you wanted to wait for the trade to form first, just remove that entry there. Okay, so we see the breakout. Okay, the trend is forming. And we're going to join around here somewhere. Basically, we can apply the same entry principle. Either a breakout of the lower band or a pullback to the high. So really anywhere around here is a good entry. The thing about this particular trade is you're going to see that the MACD is showing that the market is going up, which to be fair it is. You can see there. Okay. This is why indicators people call them lagging. I mean, this is an example of a lagging indicator because the MACD is not below the signal line. It is below zero, to be fair, but a lot of people want it to be below the signal line. It's not set in stone. I mean, if you just use your eyes and you look at the chart, you can see this level of support. There's a breakout here. Okay, so we don't need to take the always have the indicators must all agree 100%. You know, you can just use your common sense. You can see that, okay, there's a level of support, resistance here that's been holding well. In fact, it goes back to here, this resistance. You know, this support is holding well. The market is ranging here. This is a wedge pattern as well. So we're going to expect a breakout, and we do get the breakout. Still have the lower highs. Just extend our trend line there. Market is still making lower highs. And there is a breakout there, yeah? Okay, without the MACD being below the signal line, but it is below zero. Okay. Otherwise, you could have just taken the trade based on the breakout of the Bollinger Band there, or even the reversal from the top Bollinger Band. Okay, and that would have been another good entry in this downtrend. If we zoom out, we can see, you know, around 250 pips of potential on that move. Okay. If we follow this trend down further, let's have a look for another breakout. So there's that breakout. There's a breakout here of the lower band as well. Okay. There was price did have a bit of a pullback here, but had your stop loss been around this high level, you would have been okay. So we could have still taken that trade. This is an instance where perhaps the MACD would have stopped you from entering because it was just above the signal line and it was showing bullish divergence. However, it still was a decent trade. What you could have done as well is just waited for the pullback, the level of support there, and you can see this big candle here. I think that's a Friday NFP non-farmers payroll candle. First Friday of the month, you can expect such moves. But again, market making lower highs, got almost a wedge formation there and a breakout to the downside. MACD still below zero. Bollinger Bands wide here, so the trend is strong. Then we start to come into this consolidation here. Perhaps we're thinking that it might be late or getting late in the day to get in this trend. It's not the case. As you can see, there's still lots of gas left in the tank, so we can wait for the MACD. See, the MACD goes up here, goes back to that side, and then when it crosses back over here, this is when we're going to start looking for sell trades, either on a pullback to the top or middle Bollinger Band or on a breakout below. Okay. So anywhere around here, even the breakout here with a stop loss up here, you can just, because we've seen that move there, wait for the pullback to the middle line and enter there. Okay. MACD below zero. You can wait again for the MACD to cross the zero line there. It's really just, it depends on your trading style. If you're going to be aggressive or you want to be more conservative and just have additional confirmation through price action and candlestick patterns. Okay, just to better time your entry, more favorable price point. Okay, other entry opportunities on the way down, the pullback here and here. You can see the middle line pullback. MACD's below zero. You know, downtrend here, you can be picking off the pullbacks of the Bollinger Band, which can give you a more favorable entry than trading the breakout, because usually the breakout occurs after a down move. For example, you'd want to enter your sell trade here at this high rather than at this low here. So you can just wait for the trend, then the pullback, and then get in on the the pullback entry. Again here, trend down, pullback, enter on the pullback. Okay, move downwards here, pullback. Okay, so we have the breakout down there. This, you know, this would have been a decent breakout trade, not just on the Bollinger Bands, but you can see this level of support here. Okay, so it doesn't have to be the Bollinger Band entry. Price action, in my opinion, is actually better. The Bollinger Bands can, however, be good for finding market squeezes or just a visual way of looking at the trend, the volatility in the market. As I said, the narrower the bands, the less volatile the markets are. The wider they are, the more volatile, and the greater the trend momentum. As you can see here, the bands are wide, the trend continued quite significantly, and we're hitting a level of support around here now. Okay. MACD, again, you can use crossover of the signal line as entry. This entry here, you have a breakout of the bands and a crossover of the MACD signal line, so it's almost double confirmation for a short there. Stop loss again above recent highs. By the time we're there on that trend, you might want to think about weighing out, because you don't want to get caught in a potential bear trap. A bear trap being when traders are trying to sell at the support level too low, and then price could end up heading in the opposite direction. We would rather get in up here somewhere. Okay, so that's a good example of a strong downtrend with ample opportunity for entering based on the Bollinger Band and MACD trading strategy. Hopefully you found something useful in this video. You can apply the same principles if you're trading long, okay, in an uptrend. So we have an uptrend here. Again, you can trade on the pullback to the Bollinger Bands, okay. This time we're going to be trading long, obviously, because we're in an uptrend. You can see here and here. When the market's ranging like this, okay, the bands are tight, they're flat. This can be good for range trading. You know, some traders in this example will be buying when price falls below this band and selling when it goes above this, and just try to, you know, trade that up and down. I actually prefer to trade with the overall trend, so I'd be looking to take long trades. And to be honest, I'd want to just take one big trade in this move, just get a good entry and maximize the move as much as possible. Okay, so in terms of the MACD, again, same principle, MACD above the signal line and above 0. When the price is here, it's quite far away from the trend line. So we probably want to wait for a pullback closer to the trend line here. Then we're going to look for our MACD to go to the positive side around here somewhere. The MACD cross is up above the signal line. If we wait for it to go above 0, it does here. So we're above 0, we're above the signal line, and this is a potential entry opportunity also on a breakout of the Bollinger Band. One thing I'd be wary of in this scenario is we do have this level of support, of resistance, sorry, and also this level of resistance. Okay, so I'd be cautious of buying into this resistance and perhaps waiting for the breakout, which happens around here. And it's not just a breakout of that resistance level, it's also a breakout of the upper bands as well, confirmed by the MACD being above the 0 and above the signal line. Again, that just emphasizes my point regarding multiple confirmation for trades rather than just relying on one particular, you know, relying on a candlestick pattern or price action or one indicator. It's just good to combine them, and when they sort of all line up, that can be the ideal trade. So breakout of resistance, MACD agrees, breakout of Bollinger Bands, happy days. Just as in this example, we had this level of resistance here. We're still in an uptrend. We can see the market making higher lows. Sorry, if we just mark out the breakout of that resistance, okay, is also a breakout of the Bollinger Bands, and the MACD is above the signal line. Okay, it's not above 0, but if you want to wait, you can wait and enter there. But as I said, indicators can be lagging. Many traders may have been happy to just take the breakout of that resistance line there. Another good trade in this trend, which is a really good trend here. Even if you got in there, there's still 250 odd pips to enter. Don't just want to enter any Bollinger Bands breakout either. For example, you wouldn't just, you can, but it's not ideal. Like if you see this breakout here, you wouldn't just jump straight in. Or a breakout of the upper band. No, if you look at the MACD, how high it is, it's showing that perhaps the market is overbought. You can want to wait for a pullback, and you can see the pullback by just looking at your charts. As I mentioned earlier, waiting for the price to pull back to the trend line. Okay, so wait for the pullback there, which is shown in the MACD, and as it crosses back up around here is when we can start looking to trade. You see here when it crosses back up, which is another reason why you don't always want to wait for other indicators to confirm. I mean, some traders might just use the MACD crossover as entry. They might just look at this and say, okay, it's a pullback into the trend, I'm just going to get in there. Whereas others would prefer to wait for a breakout of this resistance level here and confirmation from the Bollinger Bands. So yeah, there's just many different ways you can interpret and trade them, but I hope this video has given you an idea of how you can use the Bollinger Bands and MACD to form a comprehensive trading strategy. Just make sure you're keeping an eye on the price action, candlestick patterns, and most importantly, money management. Okay, thank you for watching. Please like and subscribe for more. Catch you on the next one.